And if you click on participants, you can see, we'll be able to see attendees logging in.
Hello. I don't know. We're all on it.
Do you go full screen with the presentation once you start?
Does it show?
Caitlin wants to
Yeah,
say to you.
I see a full
Okay.
screen.
Okay, cool. Thank you.
So she emailed it to you? Yeah. Yeah, that's what she usually does. Okay, I'm on. People are going to start joining, so I gotta hang up. That's Robert. He couldn't find the webinar link.
Oh, well, because he registered. He's not a panelist on it. So he'll have to, you should have gotten the email to him after I registered him when I first created this.
Okay. Did everyone enjoy this beautiful weather? I mean, it was just amazing.
I actually was up in the Adirondacks
wow.
this weekend. Well, actually, I'm partly up there. So now I'm up in Glens Falls right now on my way back, but it was gorgeous. Unbelievable. So needed.
Yes. We rented a cottage in May, Memorial Day weekend, and it felt the same way. It just was like, oh, this is so needed. I'm like, this is great. It was just awesome. So, yeah.
Very restorative.
It really is. And it's like, I mean, just relaxing. And I don't mind cooking when I have time and things like that, you know,
Right.
like, so.
Like we're getting some attendees now. If you guys want to look in the.
We'll give everyone just a couple more minutes to join. Welcome, everyone. Thank you for joining us this morning. Great. Well, first we want to introduce the lovely Martha Malone. She's going to be saying a few words.
Good morning, everyone. I'm Martha Malone. I'm with the Village of Fairport Office of Community and Economic Development, and thank you for joining us today. This webinar was, the genesis of this was the recently completed survey that you participated in from our office regarding how you're dealing with the impacts of the COVID-19 pandemic. And our survey had a great response rate. We're developing programs out of those responses to try to provide assistance to your businesses. 35 people reported that they had secured PPP loans. Another 24 reported that they had secured EIDL loans as part of the how they're dealing with this. And the number one priority was how to maximize the loan forgiveness of those programs. So I want to thank ProNexus for providing assistance with this panel. And very specifically, we wanted to make this very merchant level focused as opposed to, say, a manufacturer or someone else with a PPP loan, because merchants, you don't have a full staff of accountants or CPAs to help you through this. So ProNexus we work with to provide some accounting and bookkeeping services for us. They've always been very responsive and very on top of programs. And so I really thank them for putting this together. And I'll turn this over to back to Kate or John, Caitlin. Thank you.
Good morning. Hello, everyone, and welcome to our webinar where we will be discussing loan forgiveness surrounding the Paycheck Protection Program and the EIDL loan. For sound check purposes, please click the raise hand button at the bottom of your screen if you can hear me okay. Excellent. It looks like our audio is working fine. By way of introduction, my name is Kate Kenny. With me, I'm one of the partners here at ProNexus. With me, I have John Scanlon, who's our controller, but he also runs our outsourced accounting program as well as our NetSuite program. We have our email addresses on the slide, so feel free to jot those down now in the event you'd like to reach out to us after the presentation. Before we begin, we have a few housekeeping items to address. You will be muted for the duration of the presentation, so if you have any questions, please use the Q&A feature at the bottom of the screen. We will answer those questions at the end of the session. For those of you on the call who are not familiar with us, the entire leadership team of ProNexus are either CPAs and former controllers and CFOs. We operate very much like a CPA firm. However, we don't do audits and tax returns. So we do all the consulting work that CPA firms do, but sometimes can't due to independence reasons. If you'd like to learn more, please feel free to visit our website. On the homepage on the upper right-hand corner is a link to our case studies, which really gives you a great idea of how we help our clients. And now I will start with our agenda. We're going to go through some forgiveness details, talk about a few new rules. Everybody knows there were some changes. I believe there's a new application that came out last week as well. There's a PPP update, frequently asked questions that we have gotten in the past, and then also we'll walk you through the loan forgiveness application a little bit, the loan forgiveness template that we have created that's really helpful, and then also finalize it with how we might be able to help you.
Okay, thanks, Kate. I'm John Scanlon, as Kate mentioned. I'm going to take you through loan forgiveness and the application and some frequently asked questions here. So let me get right into the loan forgiveness details. Now, this has changed recently, so I'll reference some of the old rules as well as I go through here. But the loan forgiveness details, PPP borrowers can choose to extend the 8-week period to 24 weeks. This is in response to a recent bill that was passed. Before, the period that you track the expenses was only 8 weeks. Now it's moved to 24 weeks, and that's actually a huge deal. It allows for many businesses to almost guarantee that they're going to have 100% forgiveness because you have more time period to spend the money and to calculate those forgivable costs. The other huge change here from the recent bill is the loan will be forgiven if the funds are used for payroll costs, interest on mortgage, and utilities. This is not a change, but now it's 60-40. Is the percentages for payroll costs versus non-payroll costs. If you may recall that before that it was 75% and 25%, meaning in order for your loan to be 100% forgiven, at least to start at 100% forgiven, you would have had to spend 75% of those costs during that measurement period on payroll. Now it's kind of reduced down from 75% to 60%. So that's really good news. For businesses that needed to spend a little bit more money on other things to keep themselves alive. Borrowers can use the 24-week period to restore their workforce levels and wages to pre-pandemic requirements for full forgiveness. We'll get into this a little bit more detail, but basically, as long as in the previous rules, as long as you had your employee levels back up to what you had before the pandemic by June 30th, then that would help you your forgiveness be closer to 100%. Now that period is now moved to 12/31. So now we have a lot more time to get our employee levels back up to where they were before the pandemic. The new legislation includes 2 exceptions, allowing borrowers to achieve the full PPP loan forgiveness, even if they fully don't restore their workforce. So it allows for employees to adjust if they could not find qualified employees. So yeah, I mean, there's quite a few really good unemployment benefits out there. So it may be a little bit more difficult to find employees or get them off unemployment to have them come back to the workforce. So that may, as long as we're keeping documentation that we're making offers to those employees, that won't hurt your forgiveness at all. We'll get into that a little bit more. Borrowers have 5 years to repay this loan with an interest rate of 1%. 1% is always been the interest rate, which obviously is very favorable. Before it was 2 years to pay back this loan. Now we have a whole 5 years to pay back the loan. And businesses that took the PP loan can delay payments to their payroll taxes. There's not real specific information on this, but if anybody has questions on it, we can certainly do the research to get a more specific answer on that. That's actually fairly new, that last bullet. Okay, Next slide. Okay, a few new rules. Actually, a review of some rules that, there's been a few changes. I'm going to go through those right now. As you recall, or you may recall, the forgivable costs are in 4 broad categories. So you have payroll costs, bigger business mortgage interest payments, business rent and lease payments, and business utility payments include telephone and internet. So there's 4 broad categories. These expenses are essentially forgivable during the 24-week period. The generally forgiveness is available for these costs in the covered period. Now the covered period, you'll hear me talk a little bit about the covered period and the alternative covered period. The covered period is essentially the 24-week period beginning on the date the loan was dispersed to you. So if you got the loan on April 24th, the covered period starts April 24th and it goes 24 weeks out. The alternative covered period, I'll go over that in a second, is really more towards payroll. And then the SBA requires that that 60% of those costs be used for payroll. We talked about this before. It's changed from 75%, so this is really, really good news. Payroll costs specifically are payroll costs paid or incurred during the borrower's covered period or alternative covered period. So we talked about the covered period above, covered period being the date that the loan is dispersed, 24 weeks from there. The alternative covered period is the first day of the payroll period date after the loan is dispersed. So what's the difference? The alternative covered period is, so if you receive the funds on the 24th of April and your next payroll period starts on May 1st, then we start calculating, or we start looking at the 24 weeks May 1st. It just allows for companies who have more frequent payrolls, like weekly and biweekly, to use that alternative covered period so that those payroll costs are incurred, so we can use those. So if you think about the end of the 24 weeks, you'll still have a pay period, say at the week 23 and 24, and you're actually going to pay that payroll after the 24 weeks. But as long as you use the alternative covered period and you pay that payroll under normal circumstances, say a week following the end of the 24 weeks, you can use that payroll expense. The cash compensation is, wages, bonuses, commissions for people who make under $100,000. So a real easy calculation is, for the 24-week period, this particular employee cannot make more than $46,155. So that's an annualized basis of someone who makes $100,000. Okay, non-cash compensation payroll costs are employee contributions to employee health insurance, employer contributions to employee retirement plans, employer paid state and local taxes. So an example is your state unemployment tax for New York. You can use those in the calculation. Moving on to eligible non-payroll costs. You're talking about your covered mortgage obligations, so business mortgage interest payments, your covered rent obligations, your rent payments, utility payments, electricity, gas, water, telephone, internet access, and you can still use paid or incurred during the covered period and paid as long as they're paid on the next regular billing date. So as long as you're not stuffing a whole bunch of expenses in that calculation period that you're going to pay a long time after. So, it's really common sense. And on all these types of obligations, the mortgage, the rent, utilities, you would have had to enter into those contracts before February 15th of 2020. And then, as we mentioned before, these costs had to be about 25, or could be no more than 25% of the total expenses. Now they're 40%. So that's really good news. And then the last thing here for this particular slide is the reductions in average full-time equivalency. So there's a lot of talk about calculations of what your full-time equivalents were back before the pandemic happened and what they are now. So there may be a difference between those two employee levels, and those will be used, or that calculation or comparison will be used in calculating, any reductions of forgiveness. So you basically take, there's a couple of measurement periods before the pandemic, and I'm going to go over those. One is you're taking the average full-time equivalents during the time period February 15th, 2019 to June 30th, 2019 versus your average full-time equivalents during the covered period. So you're comparing both periods. Or you can take the full-time equivalents in January 1st, 2020 to 2/29/2020. So that's the measurement period, and compare that to your average full-time equivalents in the covered period, which is the period that you're using to calculate all these forgivable costs. For seasonal employees are a little bit different. You're going to use a kind of an average, a longer period that kind of calculates the average employees during the winter season and the summer season. That period is 2/15/2019 to 6/30/2019 versus the average period or the average FTEs during the covered period. So how do we calculate this FTE? And we can help with this, but simply you're looking at the average number of hours paid per week divided by 40 hours. So if you have someone that works 40 hours normally, and you divide that by 40, you have 1.0 full-time equivalents. If you have somebody that is under 40 hours, the SBA makes it easy that you can count that person as 0.5. So it's either 1.0 or 0.5, or you can actually use the absolute calculation of, this employee is 0.66 of a full-time employee. It's really up to you and how you calculate those things. But the SBA has made it a little bit easier to say, let's not get into granularity with the decimal points, and let's count a 0.5 as a kind of that part-time employee. And you're really just comparing those numbers from the measurement periods to the covered period. The borrower, there's a couple of safe harbors. If you reduce your employees, your full-time employee levels already during the 2/15/20 to 4/30 meeting, you kind of reduce your employees altogether because it had nothing to do with COVID. There's a little bit of a break there. And you also, again, as I mentioned, you have 24 weeks to get those employees back up to the normal levels. Okay. Just a second here. Okay, now I would like to go over some frequently asked questions. And, these are questions that we've gotten from our other webinars. We've had clients call us. So I'm just going to kind of go quickly through these, and hopefully they might help you with the question that you're already thinking. So what is my liability exposure around the loans of forgiveness? So when you did the application to get the money, you had to make a statement to say that roughly that current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. So you needed this loan because of uncertainty, and you needed to save your business to keep it going. There was a stern warning, if you probably followed in the news, to some larger public companies and certain universities that took the PPP loans, that took the funds from essentially smaller businesses who really needed them, and were asked actually to send the money back. I don't know if you remember, I think one was Harvard University, one was, I think, Steak and Shake or something like that. But generally, if you took less than a $2 million loan, your chances of getting audited are remote. However, it can happen. Forgiveness based on the use of funds. So again, it was 60% for payroll, 40% non-payroll, and the government and the banks want these loans to be forgiven. This is the point of the whole thing, is that these loans were used to keep your businesses alive. Nothing that you did, but they want them to be forgiven. Obviously, the banks are the ones that underwritten these, so they want them to be forgiven. So the incentive is there to have these loans forgiven. Now, when do I start tracking the use of the PPP funds? You're going to start as soon as you receive those funds. They were dispersed into your account, and they're going to extend up to 24 weeks. So you're going to keep track during the time that you receive the funds all the way up for 24 weeks, unless that changes and goes higher. I don't think it's going to be, just based on the change here. And we'll talk about some strategies how you can keep track of these funds so that it's very easy at the end to get loan forgiveness. Do I have to use at least 60% of the PPP loan and payroll? We talked about this, but yes, that's the intent of the program. 60% must be used for payroll. Now, you can use it on other things other than payroll. It just is going to affect your loan forgiveness. If you don't use 60, a minimum 60, then your loan forgiveness starts off at 100 and goes below that. Okay, next slide. Okay, 4 and 5, very popular questions, and I understand why. If I laid off workers, do I need to rehire the same employees to meet the payroll requirements? The simple answer is no. Your bank will not check to see if you hired the same employee back. On the loan application, you will have to put the names of the employees in the payroll or the loan forgiveness application. But the bank, and I've talked to a few banks, they're not going to be checking to see if John Smith was on there before and now he's not on here during the covered period. They'll basically look at your payroll amount and compare it to the previous payroll amount in the measurement period and see that the loan that you use the funds for payroll and that your employee levels are back up to normal, and you've also spent 60% on payroll. Again, if you extend an offer to an employee who rejects it, you want to ensure the correspondence is in writing. So if you made some offers to some people and all of a sudden now you're down 2 people, and that's going to affect your forgiveness. But these particular potential employees rejected the offers. Keep good documentation so that you can go back to the bank and say, well, I made these offers, but it shouldn't hurt my forgiveness because I actually intended to rehire those employees back, or new employees. Do I need to hire the same position or keep employees in the same job? Again, no, your bank's not going to check to see if you've hired the same employees back. Think about the volume of forgiveness applications that the bank has to perform. And then think about what the SBA has to do to audit some of these things. So the volumes are huge. As long as there's not a lot of red flags, you should really expect to have to be not dinged on forgiveness for these types of things. Again, one little quick comment. This is a good way to use the funds in a positive way. We have a client that had reduced their sales force by a couple and had those Salesforce members work on their website, which is a project that they wanted to do for so long, but never really had the bandwidth. So those employees were working in the business, but on something different. So that's okay. And what if I'm still nervous and want to give the money back? Common question. We advise people when we talk to them to take the loans because you never know with uncertainty. And then if you really wanted to give it back, you can always give the money back. You can always call up your bank and say, I'm not going to spend this money. I'd like to return it. Or what we advise our clients to do is to keep the money in an account. You're talking about 1% interest annually. It's the cheapest insurance policy you're going to get. So you certainly can refund it. But we advise clients to keep the money, and if you have to pay a little bit of insurance, that won't hurt. And then when can you? What if? Oh, I'm sorry. Number 7. What if I don't use the funds for payroll and rent and utilities and interest payments? Again, the rules allow for some variance between approved and non-approved expenses, but due to miscalculation, so errors. Within a reason, but the program was for payroll and those type of expenses. Again, if you didn't use some of the funds on that, you really just have a 1% loan that's payable in 5 years. So you've got a loan with great terms. What documentation should I use with my lender to show the money was spent according to regulations? The easiest solution on the payroll side is to reach out to your payroll provider, ADP, Paychex, Payrolls Plus. They will have all the documentation, and it's most likely some of the larger payroll companies will already have reports designed for you to use for these types of things. In addition, Scan in, you're going to provide bills for or cancel checks or bank activity for things like rent, mortgage, utilities, and interest payments. We can talk about some strategies on that. If possible, one further strategy is to keep the PPP funds in a separate bank account and draw from that bank account, if that's applicable, or if you can do that. Hire a third-party vendor to help you complete the forgiveness application and collect the information as you go. If you recall, getting the loan, the application for getting the loan was pretty small. I mean, people still needed help, but the application was not that extensive. The application for loan forgiveness is 11 pages long. We'll go over that in a minute. It's a lot more extensive. You may need help from one of your service providers, ProNexus, certainly, accounting firms, things like that. When can you apply for forgiveness? You can check with your bank, but normally they're gonna, at the end of the 24th period, maybe a couple of months beforehand, they're gonna start sending you some notes and saying, hey, let's get the application in, and we'll talk about the application in a few minutes. And then the EIDL loan program, what's the status of that? Many of you maybe have also applied for that particular program, which is the Economic Injury and Disaster Loan Program, directly with the SBA. They're no longer accepting new applications for this unless you're you're an agricultural company. And initially the deal was that if you at least applied for the loan, you received $10,000 grant. You didn't have to pay that back. And then it was changed to $1,000 per employee, up to 10 employees. But this program is no longer accepting applications. If you did receive the 10 grand or some of the grant, and actually really did go online and apply for this, your next steps will be that you'll receive an email from the SBA saying that we want to go forward, and you'll have to go online again and go through the application process. You'll accept the loan. You'll have to provide a guarantee that you are who you are, your ID and all that kind of stuff. So there is a second step to this if you did apply, and we can get into more of that if you have questions. Okay, the PPP loan list forgiveness application. Again, the SBA can review the loan application at any time. They're probably going to target loans that are over $2 million. But they have, I think it's up to 5 months to review the application. Because of the calculation and documentation needed surrounding forgiveness, many businesses may need, we talked about this, an accountant or service provider to help with the application. When you see the application, you can probably understand why. The loan forgiveness process could take up to 5 months, so you may not hear for a while. And given the volumes and given how the time was stretched out for the forgiveness of to applying for the loans, it's certainly going to get stretched out. I guarantee that. The loan forgiveness form instructions include several measures to reduce compliance. I guess to simplify the process, but in essence, the loan application is 11 pages long. It is, some parts are simple, but some parts are not. So again, I mentioned there's options for borrowers to use payroll costs during 2 different periods, the covered period and the alternative covered period. If there's additional questions on that, or you want to run through some examples, we're always available to do that. The flexibility of loan to include eligible payroll and non-payroll expenses during the covered, or during the 24-week period. There is step-by-step instructions. There are instructions that are a little bit ambiguous, but you can see that once you see the loan application. You can always move your employee levels back up to what they were before the pandemic by December 31st. The original date, remember, was June 30th. And then additional new exemption from the loan forgiveness reduction for borrowers who made good faith written offers to rehire workers was declined. That's where you try to make an offer to an employee, make sure you keep really good documentation. And actually the rule throughout this whole thing is to keep really good documentation. Okay, next slide.
All right, I'm just gonna pull up the application.
That would be great, thank you.
Share that.
So just, while Caitlin's doing, just a couple of words about the loan application and the documentation. We're advising our clients to keep track of all their expenses during the 24-week period. And one way to do that is we've created a kind of a directory within our computer that we scan in all the bills. Every time you run a payroll, that's a great time to take those payroll reports and put them in a folder. Every time you pay a rent bill or utility bill, anytime you do something like that, you take those or scan those bills in so that you have them in one place, so that when you provide the application, you have the documentation ready, and the bank can easily go and look in there and say, "Yep, here's the payroll for 5/1. Here's the utility bill and all that." So it's just a good idea. That's what we're advising our clients to do, to create a nice folder system so that you can refer to it back quickly. So here's the application here. And Caitlin, you could probably just kind of really slowly go down on this thing. So here it's 11 pages long. There are instructions on each of the fields. Basically it's set up that has a particular areas where you're going to put in numbers that you will calculate the forgiveness. There are a series of sub tables and sub calculations, which kind of feed into, not automatically, but feed into the overall application. You can see there's some information about the covered period and alternative payroll covered period. Again, I explained that, but this is a little bit more documentation on that. The forgiveness amount calculation, it talks about the different lines. It talks about the where, if you had mortgage, rent payments and stuff like that, you must have entered before February 15th, those contracts. It references all different types of schedules. There's a PPP Schedule A. We'll go over that in a minute. There is the calculation of full-time equivalents. There's that FTE right there on line 8. There is the line 10, dividing the loan by 75%. Now that's going to change to 60%. So this is obviously an older one, which we really haven't received the new ones yet, because now it's got pushed out to 24 weeks. We can't expect the banks to be sending us the new application quite yet. Eligible, it talks about eligible payroll costs. So there's quite a bit of information here regarding the loan application for forgiveness. Again, 11 pages long. It looks like we're on page 2. It talks about the definitions of all the different costs. Here is the loan forgiveness calculation form. So as you can see, it's got some fields where those numbers there. Now, it would have been nice if this application form calculated these things automatically, but it didn't. So we have some tools that you can use so that we can help you calculate these things so that they actually, the calculations work, so you can just put the numbers in here, having confidence that the calculations are accurate. Payroll costs, non-payroll costs. Okay, you can kind of go through a little bit quicker here. I think you're getting the picture regarding the application. Here is some disclosures. There was some disclosures on the original forms when you were getting the loans. Talks a little bit about some sub-tables to the worksheet tables. You're actually going to put your full payroll in some tables to figure out what the payroll cost for every single payroll is by employee. Here's a bunch of additional calculations. A little bit of information about the safe harbor. We talked a little bit about that. Here's your Schedule A, which talks about payroll, figuring out your payroll costs. There's also some tables that will be used to figure out your non-payroll costs. Remember, your utilities, your mortgage, and all that kind of stuff. You'll also have schedules for that. Okay, so flip through real quick here. Here's a little bit of information on full-time employees again, safe harbor. Here's your Schedule A worksheet. This is really, so you can see there's an employee's name, the employee identifier, which is either a Social Security number, or employee number, cash compensation, you have employees that are making over 100,000. You need to separate those out because they're calculated differently. A little bit more information about the safe harbor. I wouldn't worry a lot about that part. You're most likely not going to run into something where you're going to need that, but you know, it is there regardless. Another schedule. So as you can see, and Kaylin, we can kind of come up with this one here. You can see that the application is 11 pages long, and there are subschedules and schedules, and there are no formulas in there to help you calculate automatically.
Great. I'm just gonna pull up our template now so you can go to that.
Yeah, that'd be great. Thank you.
Let me go.
Thank you. Great. Okay, so this is, as you can imagine, as good accountants that we are, we have taken that that loan application and kind of put together a model that calculates, not only calculates what the figures would be in that application, but also is used as a mechanism to accumulate all those costs. As you can imagine, you've got 24 weeks to document all of these expenses along the way. So we've used this particular mechanism to not only document what we have, every payroll, every mortgage payment, every utility payment, but there's also a method to kind of calculate all this stuff together. So the first section here is really an instructions key. It has you know, instructions on, you know, for each cell, because there's formulas within cells and things like that. So, you know, if it's pink, that means you're going to put a number in a cell. If it's blue, leave it alone. That cell is actually going to calculate something. We have drop-down boxes to give you ideas of what, you know, what kind of answers you should put in there. And then we highlight some things that are extra directions in there. Within this sheet, we have kind of a list here to complete the subschedules in order, so that, you know, you start with the payroll period summary, which is used to determine, you know, when you receive the money, what payroll periods are going to be covered within the 24-week period. You can see here, it kind of figures out, okay, well, I received the funds on the 4/23. I have a biweekly payroll. That means I pay 26 times per year, and I have 14 days, and so on and so forth. This actually is for payroll. So you can see on the left side, we have the covered period and we have the alternative covered period. And the reason why we do this is because we want to maximize the loan. So if we have bigger numbers in the covered period, we're going to use the covered period. If we have bigger numbers in the alternative covered period, we're going to use that period. So this is for payroll, and we can kind of look at both periods and see what maximizes our what numbers maximize our forgiveness. So go back to the instruction key, Caitlin, for a second. So we have the borrower's reference period. So if you can go to that one, that's about 4 sheets down. And borrower's reference period, a couple over, Caitlin, to the right. There you go. Okay, so this is used for calculating those, what your full-time equivalents are compared to what the measurement periods are and compared to what you are now. So this is kind of going to figure out, okay, if I had 50 employees in the measurement period, and now I have 40 employees in the covered period, that means that I have really 80% of the employees now. So that 80% is going to hit your starter of 100%. Your starter of 100%. It's gonna actually look at that and say, well, you're really going to get 80% of that forgiveness now, because now you only have 40 employees compared to 100. So this sheet is used to document that and to figure out what your forgiveness will be based on your employee levels in the covered period. All right, go back to instructions quick. All right, there is the covered period payroll worksheet, alternative covered payroll worksheet. So these are the worksheets that we use to actually put the actual employees in there. To every time you run a payroll, you can click on one of those. Yeah, there you go. Yep, that's fine. So as you can see here, this sheet has employee number one. It's the employee identifier is 009163. Their payroll for that biweekly period was 1,800. So this kind of goes all the way to the right. Every time you run a payroll, you put in the number, the payroll of what the employee had and the hours, and it kind of calculates it all the way out. This is done for the 8-week period. We would actually just increase this for a 24-week period. Okay, you can go back to, okay, and then PPA, scheduled PPA, Caitlin, is about 3 over. This is actually pulling all the information from all those payroll subschedules. Kind of goes in here and actually calculates, as you can see in the yellow, I'm saying choose the higher number, covered period or versus alternative covered period. It's most likely not going to change that different, that much different, unless you have where one payroll period you don't pay any commissions or bonuses, one payroll period you do. So that may increase it. That may be advantageous for you to increase that. So this basically kind of calculates all the, and then the forgiveness form is 2 over. Yep. Okay, and this actually is the kind of the culmination of all those subschedules. It calculates all the numbers you need to put in that the loan the forgiveness application of 11 pages, all those blued, all those fields that were in blue. This is actually mirrors that. So this actually calculates the numbers that you need to put into the into the loan application to figure out loan forgiveness and essentially what you're going to hand into the bank. So you can see it goes along the lines of the application. It helps you figure out what your payroll costs and all your other costs are, and also it actually kind of runs in the same fashion as what the loan forgiveness calculation or the loan forgiveness application looks like.
All right, great. Thanks, John. And then I think that we just want to address one of the questions that was asked
Sure.
before this for Jennifer Buchemi.
Great. And Jennifer, I'll just read through the question. I'm an arts and crafts vendor and I pay booth fees for the shows that I do. I consider them my mortgage and rent costs. Can these fees be used as mortgage and rent costs? I apply for these shows months in advance and get acceptances closer to the show dates. My late fall shows are still trying to have their event, but I won't have the canceled checks yet until the final decision has been made. I also pay a monthly rental unit to store my business supplies, etc. Can that be used as rental costs?
The short answer is it's likely that those can be included, especially the rental, the second of the two rentals. Kate, I didn't quite hear the first part of the question regarding that type of rent. Can you just repeat that?
Yes. So she pays fees essentially to attend craft shows, and she's not sure yet if that will actually happen because she's got one coming up for October, but and she considers that like a mortgage or a rent cost, right? Because she's going to showcase her items at the show, right. And there's a cost to it.
It's okay. So it's likely that you can use those type of expenses. And the other thing too is I will suggest that, you know, I don't know, I'm not sure who your bank is, but one way to also check on, because the hypothetical questions like that, which is a great question, are not necessarily listed in the SBA guidance. So it doesn't say those types of things. But if we use kind of the same type of thought process and when you do your taxes, as long as it's used for the business, and it is, and you can document that, you can document the reasons. But I would also suggest that we talk to, or you talk to your bank with this particular question as well, because they're actually the entity that's actually going to approve or not approve. It's most likely never going to get to the SBA. So the bank would be also a good resource to look at that and say, you know, give them the hypothetical as well and say, you know, this is what I use. I'm more comfortable with the second rental and less comfortable with the first one, but there's no specific guidance on that. But again, your bank is going to have to go through thousands of applications, and one way to go through that would be to talk to the bank and say, this is what I'm doing. Are you comfortable that this is going to be forgiven? That's my suggestion on that.
Yeah, she says it's Citizens Bank, and she said normally she annually pays over $14,000 in these type of booth fees, as I normally do 35 weekly shows a year. You know what, Jennifer, I agree with John. I think it's really going to be up to your bank in this particular case, because from an accounting perspective, you might consider those marketing fees as well. And John, I don't know if you would agree with that, but
marketing fees would not be, but if we can move that towards rent, that would be very.
That's in a sense, that's really her store.
It is.
So.
It is.
I think asking your banker is a great thing, because they're going to be the ones that are approving or denying that loan, and they can determine those gray areas.
It's likely, I would say, but again, just like Kate said, your bank is going to, and they may not know, but again, they're going to have to review hundreds and thousands of applications. Important to have documentation and reasoning why you're using. I mean, actually, the way the question was phrased is really part of your documentation. You're talking about why you're using this type of why this expense really is rent.
Right, I agree.
I think there was one question. Was there one question regarding, was this very similar to that, where a person had they work from home, and they have they wanted to know if they can use their they have a home-based business. They wanted to know if they could use mortgage interest on their house and things like that, and rent, stuff like that, for working at home. Again, I don't know if this is one of the questions, Kate, but I think it was one of the ones that were earlier that I thought of. Again, just like when you do your taxes with the IRS and you have a home-based business, anything that's going to be flagged that looks unusual is going to be flagged for an audit. But certainly, if you have good documentation, just like you do when you prepare your taxes, and you're trying to prove to the government that, hey, I have a home-based business, these are expenses that I have, those should be able to be included in forgiveness if they're documented correctly and very clearly.
Great. And I think that's it for questions. So thank you so much for attending today. Martha, did you want to add anything else to the remainder?
Oh, you're on mute.
I just wanted to say thanks again to ProNexus for putting this together for us, because it's, this is what the merchants had asked for, was some assistance in helping maximize the PPP, and it's so critical to them that they are able to get this type of information to help them. And I do very much appreciate your time putting this together. So, and I think you had mentioned that as a follow-up, people will be able to kind of reach out to you with kind of high-level questions. Is that right?
Absolutely.
Certainly.
Okay, great. Well, I really appreciate your time, and thanks very much.
Thank you. Enjoyed it.
Thank you. Have a great day.
You too. Bye now.
Bye-bye.
Thank
Bye.
you.